Welcome back to this week's market preview. So we'll quickly look at what's happened last week and then we dive into what to expect in the coming week. So last week we traded that we had an ATR bust, right? So somehow I don't know why I don't have that particular indicator loaded. We had an ATR bust that was 2 weeks ago. And so we expected to take the opposite, right? Go watch the market preview of last week. And that was basically what happened. On Tuesday, we had this fractal high form, just taken out, and we got a reason to sell. And EU gave us our full TP, and then price reversed sharply, took out the trade, and unfortunately gave us what we call an American session trade, which never came to pick us by the time we placed our orders and price just dropped down. But all is good. We still got our full TP on the first trade that we took on EU. So during the non-farm payrolls, we saw price push down sharply and then reverse again sharply to the upside. So basically, off swing short, what we had was a bearish outside bar, which gives us a bearish bias for the current week. So on swing short, we are bearish for the current week on USD. If we go to look at our fractal OF, I mentioned the fact that this was too far a point, all right, to try to push price to go change the trend, and that most likely we are going to get an intermediate high somewhere around here. And then if they eventually want to change the trend, it will be much easier to break the fractal high that we'll get here if that is greater. And that's exactly what happened. We got this fractal high, all right, that was created, and now price has pushed all the way up. However, I'm still of the opinion that we're still going to continue, we're still going to be bearish for now. I don't think, especially ahead of CPI on Wednesday, and then the euro interest rate decision on Thursday, I don't think market participants are going to be making too much of a statement by trying to change the OF. But again, I could be wrong. What I'm really expecting is a situation where we might probably run through it on Tuesday or on Wednesday and then begin to drop from there. We might not even get there, right? So it depends on how you place, but fractal OF, we are bearish. Our volume trend is equally bearish. Swing short, we are bearish. So all our three metrics right now is still pointing to further bearishness on the USD. So that is what we'll be playing. So we've had this fractal high formed here. So what we'll be expecting is that price will come tomorrow. Price comes tomorrow, takes it out. It could happen tomorrow. It could happen later in the week. But basically, one price to take this fractal high out, and then we'll go to our lower time frames to look for a reason to sell to the downside. So it's pretty simple. It's pretty straightforward. We are bearish on the USD, and that is what we are going to be playing all through the week. So right now, we look at the H4 on EU. We could see that while the daily is bullish on EU, H4 is actually bearish. So until H4 turns bullish, we cannot play anything intraday. So we want H4 and the daily to align in order for us to take our intraday setups. All right, so let's quickly look at the news events to expect this week. For Tuesday, we have inflation data coming out from Germany. Usually that is of no effect because one of the things I've come to observe, especially when it comes to inflation data from the Eurozone, is that it is almost always in line. It really misses the forecast, even if it misses it just by a small percentage point. And then we have employment data coming in from the UK. So that is something to watch out for Tuesday. Now on Wednesday is the key day for this week. We have CPI, and ahead of the FOMC decision next week, if I'm not mistaken. We market participants are still going to be watching that closely because though the FOMC, the Federal Reserve, is beginning to place more emphasis on what is going on in the labor market, but inflation still remains something to keep an eye out for. Now, personally, based on my own calculations, I'm no bank, of course, or hedge fund or all that, but based on my calculations, I think we are going to see we should be expecting a drop in the inflation rates, and the consensus is for it to stay the same. So we should have a miss. We will likely get a miss on Wednesday. It should come in lower than expected. We should lend further credence to our bearish bias on the USD. So that is basically what you have for Tuesday. Then I think that, okay, on Tuesday as well, we'll have GDP data coming in from the UK. Then on Thursday, we have the ECB interest rates decision. We have the ECB interest rate decision, and then we have PPI. Now, I think if the USD is going to bottom and then begin to reverse, it will likely happen with the PPI. It depends on what the PPI is going to be saying. And then we have the jobless claims, which, as I mentioned last week, is going to continue to be a sticky point, with market participants watching that closely, because that will give us an indication of whether we have further softening in the labor market or not. And then Friday, we have the Michigan consumer sentiment on Friday. So it's going to be a solid week, but largely, I believe, a whole lot of things will be determined by the CPI report on Wednesday, and then followed by the PPI report on Thursday. So we could have a situation where that is really what I'm envisaging, where we drop all the way down, right? We drop all the way down, and then on Thursday we begin to reverse back up. So we'll see how that plays out. So until then, enjoy your trading.